Hello everybody, Jackson here from the Wall Squad today, talking about 3 heavily discounted tech stocks, growth stocks to look into. So if you're looking for a deal in the stock market right now, then look no further, really. Of course, first off, we're going to be talking about Zillow. Zillow was cut by a quarter today. You see right here, down 24.92%. They released some news that their buying program, when they were buying houses, is stopped, and they're selling their houses at a loss because it just turned out to be not working. So they lost some money. Investors aren't too happy about that, and that's why we saw a lot of selling today. So you can see down 25% in the past 5 years. You can see this chart where the candle is a week. So we can see the week chart is down 36.8%. So not a good day or week, really, or past couple months for Zillow. It's definitely hurt them as a company. We can see the past year performance at one time up 132%. That was in February. Now we are down 26%. Like just today didn't even happen, and we'd be straight where we were a year ago. So the funny thing is about these lines, right? I drew these lines before the fall today, and you can see it did kind of settle exactly at that line. So the funny thing is, you can see right here, 1, 2, 3, I drew this line, and then 1 and 2 and 3. So I knew that these lines had significant value because the stock would either bounce, hit it and bounce back, or bounce above it and keep going, right? So I knew these trends had significant value, and of course today the stock ended up right on this line, so we know that we could see a bounce in the future, right? When a stock falls this much in a single day, the chances of it jumping back up at least a little bit are pretty high. We're going to see that with some other stocks here soon. But yeah, Zillow, not a good day, nor week, nor past couple months for the company. We can see the earnings, a surprise of negative 702%, right? They're supposed to make 16 cents. They lost 95 cents. Not a good look. You can see the income statement, still a negative year in the performance of the past time intervals. So down 50% year to date, cut in half, and cut a quarter in just one day. So Zillow is definitely one of those stocks to look out for. On the year chart, we can see it is basically, it is oversold right at that 30 mark. The past couple times it's been oversold. It was right here, and those are definitely buying opportunities. So if you're bullish on the real estate market, bullish on Zillow, now's a great time to pick up a couple shares, at least to start a position. Watch for it to keep trading in the next couple weeks, see what it does. Maybe pick up more if it falls more, but Zillow is definitely one of those stocks where was a great one to own a while ago. Now is being in half from the top. Let's actually see this. It is down over 68% from the peak. So you're buying this company at a 68% discount from the all-time high. So do with that what you will. Zillow is definitely one to look out for. Next we have Chegg. So Zillow and Chegg, the Wall Squad has been dealing with or trading. Right, Chegg, we are just trading this one. And Zillow, Chris is heavily into Zillow. He has $1 million position, or he had $1 million position in Zillow, and he's buying more at these prices to average down his share price. So let's check on Chegg. You can see a huge, not even a huge earnings, right? Just a huge move for the stock, cut in half in one day. 62, and ended the day right around 48% down. So not a good day for Chegg. Of course, up. Let's see what it's up today. 6% today, just a little rebound, but still destroyed from the earnings report. So let's check out the earnings report. They beat based on an income and earnings per share basis. However, the number of students, number of textbooks that they've sold has fallen down, which means the number of college students the attendance is below estimate, right? And that's not good for a company that sells textbooks and study guides and all this information and stuff you need to be in school. So company was cut in half in one day. I did draw this line before as well. This is right at 30, 28, 32. If the stock ever gets to this price, I know I'll definitely pick up a large, meaningful position. Even though on the RSI basis, we're at a 17, 18 RSI, which is hugely discounted. You can see even before this fall, we were at 24. We are still at a discount. That's why the Wolf Squad was in. 5-year basis, we are also heavily on that RSI of a 19. So huge oversold stock, huge. Basically, it turned over, right? We were bullish back in February, just like Zillow, and now the stock is more than cut in half once again. So Chegg, another stock to look at. Earnings looks good on paper. However, when you dive deeper, the estimates for students was below par, below not what they wanted, so stock was hurt. But 50% one day, maybe an overkill, right? And that's why the stock's pumping back up. So if you want to get on in now at prices not seen since last year, then now's your chance. Last stock we're going to talk about today is Snapchat. Another stock that has been hurt heavily. And funny thing about all these charts is I drew this line before this stock kind of crashed. You can kind of see where I'm coming from though, right? 1, 2 here, 1, 2, 3, 4, 5 here. So I was thinking about buying like right around here because let's just look at this. When a stock falls more than 20 or so percent a day, the chances of it not rebounding are slim. And when I saw Snap, I knew that it was discounted. I knew before it was doing really well. And so I was waiting for this $50 mark, or 51 to 49. And that's where it's at, or that's where it's heading to right now. You see up 1.4% today. But this was more than a week ago. Here. It's trading at 74, 75, fell down to 60, and now we're at 52. From the all-time high, let's check out what we're getting Snapchat at, what discount we're getting. We're getting a 36% discount, so less than the others, but still a third of the company that has fallen off the hill, right? You can see Snapchat did have a not bad earnings. However, their spending and their advertising did slow down because of the iOS new feature, and it did hurt the company indeed, right? The advertising that the company was given through their customers was not a lot, and the turnover was very bad as well. So on paper, once again, looks all right. They did lose money once again. We can see the quarterly basis down $70 million with a revenue of $1 billion. But on an EPS basis, they still beat their estimates by 5 cents. So all these companies, except for Zillow, they beat their earnings, right? It's just you have to look more into it. So yeah, Snapchat, Zillow, and Chegg are 3 stocks to look at, 3 tech growth stocks that were once beloved by the market, now hated. And if you're a contrarian or think that these stocks deserve a higher price, go right ahead, because you will not get a cheaper price than this, most likely at a stock this size or these sizes, right? So yeah, that's the video, guys. Thank you for watching. If you like this video, please click the thumbs up video and subscribe for more content every Monday, Wednesday, Friday. Thanks again.